Support for Carolina Business Review provided by Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries.
According to fresh reports in the Federal Reserve Bank, Reuters News Service, and others, by the numbers, the Carolinas economy is growing and now getting better, meaningfully. Jobless numbers inch downward, confidence in future activity is cautiously up, and sales, even beyond the much-hyped Thanksgiving / Black Friday / Cyber Monday frenzy, are also headed higher. Happy Christmas, happy Hanukkah, season's greetings. Thanks so much and welcome back to the most widely watched program on Carolina business and public policy. I'm Chris William, and with the backdrop of improving conditions, what policy issues are still most crucial? And because we are feeling more flush and more comfortable, will these keen issues fade from view like they often do? Also, can the gulf between political parties still undermine our again expanding commercial activity? We start with Chris Fitzsimon from North Carolina Policy Watch and Orangeburg economic developer Gregg Robinson, and later the community bank that has been growing more like a tech company than a traditional financial services provider. Robert Hill of South Carolina Bank and Trust joins the dialogue again.
Major funding also by Novant Health, bringing you world-class technology, clinicians, and care when and where you need it. The Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. And by Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. This edition of Carolina Business Review was recorded December 6th, 2013. On this week's program, Chris Fitzsimon of North Carolina Policy Watch, Gregg Robinson of the Orangeburg County Development Commission, and special guest Robert Hill Jr., Chief Executive Officer of First Financial Holdings, Inc. Now, here's Chris William.
Welcome to our program. Happy holidays, gentlemen. Welcome. And Chris, welcome to the program. This is the first time you've been on.
It is. Glad to be here.
Thank you. We'll start with you. You know, Chris, in North Carolina, it's, you look at 2013 and 2012, and the public debate around public policy issues and politics has been so acute. Folks point to voter apathy and low voter turnout. Somebody said recently, and it said on this show, that we have exactly the government we deserve. That, and Thomas Jefferson even said that the office of citizen needs to be occupied just like the office of any representative. How do you come down on this?
Well, I think that, I don't generally disagree with Thomas Jefferson. I wouldn't want to start there. But I think there's a lot of different things going on these days. There's also the latest polls that we've seen. The Elon poll, for example, showed that approval ratings of all politicians and political institutions are down. But they're down about of a lot of institutions. And I think what we have now is something maybe slightly different than we've had in the past, is that I think a lot of people in North Carolina feel like the rug has been pulled out from under them. They used to have faith that if they worked hard, got a good education, they'd get a good job. They read in the paper that pensions are being threatened. People who retired and thought they had a guaranteed pension. They're making less money than they used to. They have a job maybe if they're lucky, but they're not making as much. They're very uncertain about health care, whether you agree with President Obama's health care or not. There's so much confusion about it in the headlines. So I think what you see now is a huge sense of unease in North Carolina among the voters. They're mad at everybody because they don't really know yet what their future holds, and they're uncertain. Their family's future is really up in the air.
So what do you think happens to Republicans in the next election cycle?
Well, I think in North Carolina, I think the election is going to be a battle between the Republicans' efforts to frame President Obama negatively and use the problems with the rollout of the Affordable Care Act versus the Democrats trying to use what I believe and others believe was a relatively extreme General Assembly session. North Carolina is very evenly divided. roughly the same amount of people voted for Democrats for the legislature as Republicans. They voted for more Democrats for Congress than Republicans, but because of the gerrymandering, it's an overwhelmingly Republican representative state. So anytime either party goes way off in one direction, and I think even a lot of my Republican friends would privately admit they've gone way off in a certain direction, I think that's their battle, and you'll see a lot of money being spent trying to convince people that what they have done is more in the mainstream without talking about some more of the extreme measures that they took this year.
Yeah, you know what, Greg will bring you to this, because in South Carolina, you know, it's the reddest of the red states, or certainly, or has been, and can be. And it's not so much about the political gulf between the right and the left. It's more about policy issues, and it shows up in things like the gas tax issue. And now, let me ask you that. It seems like the State Infrastructure Bank has signed off on $500 million of bonds that are going to be deployed toward improving roads and bridges. But this other thing about the state's gas tax, South Carolina has one of the lowest in the South, one of the lowest in the countries, and that looks like it's prime target to raise revenue to fix roads. And there seems to be a wave building around there. A couple questions. Is this going to become a reality? And will Nikki Haley soften on her stance being against that?
Well, from an economic development standpoint, I hope she does. I don't know if she will. However, I can tell you from a state that is constantly trying to recruit, obviously with the Port of Savannah, the Port of Charleston playing a critical role coming up with the widening of the Suez and the Panama Canal in 2018, we cannot ignore this issue. And we either have to find the revenue stream from somewhere else, or we tie it to a rational nexus behind the gasoline use, which would be obviously an elevated tax. You can't continue to have one of the highest, biggest road systems in the country per capita and have one of the lowest gasoline taxes in the country as well. It doesn't work.
So you think at the end of the day, this debate, common sense is going to win out?
I hope it goes back to economic development. And as long as we tie it to economic development, both blue or red will agree that it's green and it means money. And it has to be improved. We can't continue to neglect our existing roadways. We're not talking new, we're talking existing. And we've got to improve what we've got, and it will be further downstream revenues as a result of it.
You know, talk about economic development in the old North State, Chris, and I know you know this well. Department of Commerce is going through a reset, and this is a DNA change for them, and it's been rolled out by the governor, and Secretary Decker's been across the state on a listening tour, and they're getting ready to roll out now what this Partnership for Prosperity actually means. What do you think it's going to look like, and what risk does the Tar Heel state face with this?
Well, I think it's going to look like the parameters that we've seen. It's going to be a nonprofit, a new nonprofit headed by a CEO who's yet to be named, which I think we'll find out very soon, which will have a lot of independence from the Department of Commerce to negotiate deals. Those will have to be given approval by the Department of Commerce, and in some cases a General Assembly. I'm still a little confused as to what problem they were trying to solve. We've had a lot of problems in state government over the years in North Carolina. I haven't heard a lot of criticisms, with the exception of the last year or two, of the Commerce Department. There are a lot of Republicans who've been very involved in the Commerce Department and Democrats. The big danger is a couple. One is that obviously it doesn't work in recruiting businesses. I think we'll still have some success. The big danger is, will people perceive there's transparency there in terms of salaries and open meetings and open records and self-dealing and ethical considerations? There's a lot of questions about what regulations are going to apply, because the North Carolina General Assembly never passed a bill authorizing this. There was just a word added in a bill to let them go ahead with it. There are outlines in a bill that was introduced, but we don't know yet whether or not this new entity and this new strategy will follow the dictates that the legislature was sort of heading towards, but ultimately didn't approve. I think the real risk for the McCrory administration is that there'll be some sort of perception of ethical conflicts, because it might not be as open as state government generally is. We have a pretty good open records law in North Carolina, and there's real worry about that.
Do you think this adds support to the recent Republican touting of, well, jobs are coming down? These policies, these plans that we've put in place are working?
I think it's way too early to tell. I mean, the national unemployment rate now, is 7%. Does that mean that the same people who are saying that are patting President Obama on the back, every day? And I doubt it. And I think that the truth is there are some things that states can do, and certainly in individual projects and economic developers can do very well. But the larger economic picture of a state is heavily influenced by what's happening in Washington, what's happening around the world, and state policies can nibble around the edges and make a big difference in people's lives individually, but the giant global economy and the national economy have much more to do with it. So it's kind of interesting. There's one legislator in North Carolina sent out a re-election email recently saying, from the time I put my hand on the Bible and took the oath of office, our unemployment rate has gone down by 3.2%. And I thought, man, that must have been some oath he took. I mean, all politicians do that, you know, but
sure.
I think we need to be realistic about what state economic policies can do in the shadow of the national economy, which is improving.
You know, a smart CEO once said that you're never as good and never as bad as your numbers, and I think it's probably prudent to remember that. Yeah. In about a minute, Greg, you talk about economic development. Securely and solidly, the Low Country has nailed the Boeing facility. There's no doubt about that. There's a lot of hope for that. Now, Boeing has put out a new bid, a new RFP for yet another place to build parts and actually put together the plane. South Carolina was in on it early, but now North Carolina, Greensboro's new mayor, said that she wants to aggressively go after that. Charlotte's in the hunt now for this thing. So what happens with this, and when do we find out if this new Boeing facility is in fact going to be in the Carolinas?
The silver bullet. You know, quite honestly, when you kind of look at it, it's a genius move on part of Boeing. They know exactly what they're doing. And in order for them to not only leverage where they are in Washington, but also make sure
Washington State,
excuse me, but make sure that people step up and recognize the impact of what they can do for communities. It obviously affects their bottom line, and they know they can get the best package. Clearly, South Carolina has proven itself. North Carolina has proven itself with Honda Aviation as well. We have the ability with the skill sets, we have the certified workforce, we have a low union footprint, first and foremost. So I hope that the Carolinas rise to the top no matter where it goes. But Boeing is pretty savvy when it's opening this RFP back up, because they know that in this climate, it will go to the higher bidder.
Do you any sense what the timeline is on the decision?
You know, based off of the sales demand, you know, the demand for the product, it has to be within a reasonable time frame, or you're not going to be able to service the customer. So back to the customer, it has to be quick. I do not know what the timeline is, but it has to be soon, or they wouldn't be doing what they're doing.
Yeah, okay. Thanks, gentlemen. We're going to bring our guest on in just a moment. Next week on this program, Jack Sanders is the relatively new CEO at Sunoco Products. He will be here. And then following Jack Sanders the following week, in 2 weeks, he is the Lieutenant Governor of North Carolina. Dan Forest will be our guest on this program in 2 weeks, and hope you will join us for that. You know, this organization that we're getting ready to find out more about has been on a tear. South Carolina Bank and Trust, and I can see him smiling out of the corner of my eye, South Carolina Bank and Trust announced and in fact completed the merger with Charleston-based First Financial Holdings this past summer, which cemented their position as the largest bank based in the Palmetto State with some $8 billion plus in assets. Their share price reflects this momentum versus the S&P Regional Bank Index that has risen about 30% year to date. South Carolina Bank and Trust has risen more than 60% year to date, just this year. Joining us again is South Carolina Bank and Trust Chief Executive Robert Hill. How can you not stop smiling? Wow.
Chris, thanks. Always good to be with you. I appreciate you having me.
Yeah, absolutely, Robert. Well, thank you. You know, these are great times for your bank. Been tough times for banking in general, though.
Yeah.
But you know, before we get into some of the challenges around lending and the economy, and so, you know, you finished the merger with Charleston-based First Financial. That, you know, looking back on it now, it was a brilliant move. Congratulations. When you go through something like that, what has surprised you, or what did you not expect now that you've got this deal closed?
Yeah, you know, there are obviously positive and negative surprises. I'd say overwhelmingly in this case positive. Number one, when Wayne Hall, their CEO, and I started talking about this, we really both believed in what the power of this combined franchise could be. What we did not know at the time is how's the market going to react to that? And obviously the market has really favorably responded. They see the power of the combined institution. And when you go through kind of from start to finish, it was about a 30 to 45 day discussion time period of learning about each other before we announced the transaction. So obviously there's still a lot you don't know. One of the concerns was the reaction in the Charleston market. An 80-year-old company,
Sure.
Major employer in that community. How were they
and
going
we
to
know
react?
how well Charleston embraces change.
That's right.
I'm kidding.
There were concerns there about how they would react very favorably. The local leaders, the local political leaders, the local business leaders have really wrapped their arms around what they see in terms of really a powerful company for the Southeast. So that's been a real positive. And then as we've gotten into our lines of business, the wealth banking business now a $3 billion business for us. The mortgage banking business now a $3 billion business for us, will be number 2 in market share in South Carolina. As we begin to put the business model together, very, very powerful.
You know, Wells Fargo holds themselves out as a community bank.
Yep.
So one of the largest banks in the world, and they say they're a community bank. You have said you're a community bank, and now you're $8 billion. So what is a community bank, and when do you stop being a community bank?
I get that question a lot. I believe at $8 billion, we've got a lot of runway left to be a community bank. Ultimately, it's where the decision's made. Is what community banking is all about, because that's what impacts the customer. And if the decisions are all made in an ivory tower in some city 4 states away and the local people are unempowered, which is pretty much the big bank model, the customer senses that lack of empowerment of the local employee. Our model is all based on, really we run our bank as if it was a group of community banks all under one set of technology, one brand, one culture, and we're putting all those things together today. But the ultimate question about being a community bank is local empowerment. And I feel like that model served us well, and I don't really see it changing. You have to have good people in your markets in order to execute it.
And push down those decisions on loans as close as you can to the customer?
No question.
Yeah.
That way they're responsive, they're easier. Customer walks in the door, it's not punching it into a computer and wait for 4 days to see if you get an answer. We can give an answer within 24 hours almost without exception.
Chris?
Well, I'm curious, you mentioned the getting into the loan and the mortgage talk. I know in North Carolina we're still having problems, not so much in the prosperous areas, but in our rural areas with foreclosures. People are still recovering, and I wondered, obviously mortgage is a big part of your business now, has been. Where is South Carolina? I mean, how are people doing? Are there still people who are struggling? Are the public officials doing enough? What is the banking community doing?
You know, it's 3 segments in terms of just looking at South Carolina. 3 real markets. There was the coast, there was the more metropolitan areas like a Charleston or a Greenville, and then there were the rural markets. Well, the rural markets didn't have excessive growth during the boom time, so really they fared overall pretty well. The metropolitan markets rebounded really rapidly. We've seen in North Carolina as well. I mean, Charlotte's up 26% year over year in housing sales. We've seen in the Charlestons and the Greenvilles of the world kind of the same metrics. And inventory, lot inventory has really reduced, and the days on market of homes is really reduced. So homes are starting to churn at a much faster pace. And so the foreclosures are much lower. People don't get foreclosed on because they can sell their house. And so now what we're seeing is lot inventory begin to shrink, and we're seeing the construction business begin. And that's an important step because we really haven't seen much of that for several years. Now the lag and the people who took it on the chin the worst were the coastal markets. We operate in Savannah, we operate in Charleston, we operate in the Myrtle Beach market, we operate in Wilmington. All those markets had similar dynamics, some worse than others, but all a huge supply of inventory, a lot of speculative development, and they've still got some overhang for that. So that's the last group to come back. But I would say Savannah and Charleston and Wilmington are all responding pretty nicely. The days on the market now for a new home in Charleston's less than 70 days.
Yeah. And kind of given the fact that you homegrown bank in 1933, founded in Orangeburg, and one of our biggest success stories, what are your plans for rural Carolina, meaning up into North Carolina? What are your plans kind of coming up in 14, 15 for those rural areas?
You know, we've always viewed ourselves as a hybrid bank, and we love the growth markets. There's certainly things that you get from those, but our roots are rural.
Yeah.
And we'll continue to focus on rural markets. When during the bank failure, 2010, 2011, 2012, we had so many banks that failed. We bought 2 in Georgia. Both were over 100 years old. Both had major credit issues. Both were in similar communities and close communities, and both were rural, or mostly rural. And we acquired those banks, cleaned them up. It was devastating to those local communities to have those types of banks fail. So we've continued to find opportunities to expand in the rural markets in all 3 states. And especially during the financial crisis, we found that opportunity, and we'll continue to. We think diversity is important. Small markets are important to us, and large markets are important to us.
You know, Robert, I want to come back to this. There's this mantra out there, and it's been proven to be true, and it's lending is going to create more jobs.
Yep.
It sounds good on television, and in fact, it works in many ways. But as a banker, as a responsibility to not just shareholders but your depositors, how do you square in your head the risk now, the Dodd-Frank overhang of whatever regulation looks like in the future? So you got costs, you got risk, and then you got people saying that you guys aren't making enough loans, and I mean you guys, I'm talking about the industry in general. So how do you get the money? How do you make those loans? How do you get them in those markets, rural or otherwise, to make sure that they're out there, it's working?
Well, you asked a minute ago about what is a community bank and kind of what separates you. And I think one of them is that you don't go hot and cold. You stay more consistent. You see a lot of the large banks, they'll get in a line or get in a market and get out of a line of business, get out of a market. We tend to be very consistent with our lending policies. During the economic downturn, we never really strayed. We stayed pretty consistent. We lent through.
Did you tighten up your standards?
We didn't. They were just as consistent before the financial crisis as during the financial crisis. And so we lent through the whole financial crisis. We loaned in our footprint in the Carolinas and Georgia almost $3 billion over the last 12 months. A lot of that money goes to small and medium-sized businesses. A lot of that goes to Chris's question about homeowners. So we've been a big supplier of capital in those markets and a very consistent, steady supplier of capital in those markets.
Do you feel like, not to interrupt you, but do you feel like your role and your contemporaries' roles are in markets, and I don't want to call them markets because these are actual people. Do you feel like your role is a leadership position to make sure that these folks are getting what they need to get? Not dismissing regulations, but that's your role, is to be a leadership.
No question. I mean, we got to be a leader. We're only a community bank, any bank. We're only as strong as the communities we serve. And when Gregg's group, this was before Gregg's time, but the Orangeburg County Development Commission was getting started. We were one of the key contributors to get that organization going. It's important to us because economic development in those communities is important because we're only as strong as the businesses and individuals in those markets are. If they're doing well, we're doing well. And that's been our focus and our feeling really the whole time. Just like during the financial crisis, we never cut our dividend. We were one of the few banks in the country, and we felt the same way about our shareholders as we felt about our communities. We never cut our dividend. Most banks did to preserve capital. Our dividend now is starting to grow, grew nicely over the last 12 months. So our philosophical view is very long-term, and we stay very consistent in our markets. We try to provide a very consistent return to our shareholders, and we take a big responsibility in the communities. Regulation, though, today, from our Wachovia days, I mean, I remember when the regulations were coming out then, I thought they were overwhelming. They pale in comparison to what's happening today.
Yeah,
more regulatory hurdles today than that have been approved in the last 3 to 5 years than in my prior 20 in the business.
We have about a minute left. Chris, you get
Well, that's a good maybe segue to my question. I guess making not specifically your bank, but the industry at large. I think people still read about settlements for things that happened during the Great Recession. Bank of America and others have had to settle for some practices that they've worked out, and yet now you're talking about regulation. What do you tell to people what do you say to people who are still worried, whose confidence is shaken when they read that a bank that they've worked with that, has had some problems and has had to settle with the federal government for not doing what they're supposed to be doing?
About 30 seconds, right?
Yeah, I think there's a real credibility problem. I mean, ultimately, the banking industry has lost some trust that we've got to rebuild. And that concerns me because that's one of the reasons I went into the industry, is because it was a respected, trusted industry. And so there's some real damage control. Fortunately, my thing I can control is our company, right. And we had none of that. We never made loans to anybody that were some kind of antiquated structure that they could not pay back. We make traditional loans to people who can pay us back. If we win, then they win, and we've always viewed it that way.
Yeah, you know, I know the late John Medlin and the Wachovia alum would be proud that you have done so well, so congratulations. And
thank you.
There's a lot left unsaid here. Please come back before another year or two go by. We'd love to follow up on this. Good to see you,
Thank
Robert.
you, Chris. Great to be here.
Happy holidays. Gregg, good to have you here.
Thank you.
We're watching
Glad
the
to be
Boeing
here.
announcement for both states.
Yeah.
Chris, good to have you in the program.
Glad
Come
to be
back.
Here. Absolutely.
Okay.
Love to.
Until next week, I'm Chris William, and hope your holiday shopping goes well at least. Good night.
Major funding for Carolina Business Review was provided by the Duke Endowment, a private foundation enriching communities in the Carolinas through higher education, healthcare, rural churches, and children's services. Blue Cross and Blue Shield of North Carolina. Who's responsible for rising healthcare costs? Join us and many others in a candid discussion at letstalkcost.com. Grant Thornton. Operating in more than 100 countries, our tax, audit, and advisory professionals specialize in helping companies unlock their growth potential. Novant Health, bringing you world-class technology, clinicians, and care, when and where you need it. Sunoco, a global manufacturer of consumer and industrial packaging products and provider of packaging services, with more than 300 operations in 35 countries. Blue Cross and Blue Shield of South Carolina, where healthcare is changing for the better. Find out how at ahealthysc.tv. And by viewers like you. Thank you. Promotional consideration provided by Business North Carolina Magazine. For more information, visit carolinabusinessreview.com.